one of the most successful communities led by Mansa Jamal in the San Francisco Bay Area, and Anthony Phillips, who's on the call. And I serve as the chief market strategist to offer a capital markets perspective on really to contextualize what's happening in the world and how that's relevant and supports the opportunities for digital assets. I have over 40 years of experience in capital markets, ranging from my bio was posted, from being inside of an investment bank, institutional sales at one of the largest asset managers in the world, raise capital for quant strategy, intrinsic value, micro activist strategy, run a trading business, done 3 industrial technology turnarounds, and now involved in a biotech company that is multi-billion dollars in value. We're anticipating selling for somewhere between $5 and $15 billion next calendar year. So I have an extensive amount of experience, and I like sharing and enabling all of you with that experience. So I've sort of paid my tuition, if you will, through a lifetime of effort, hard work, a lot of success, and maybe 1 or 2 little failures along the way, which I've always tried to avoid. And I want to take that with we're educating, and we're offering solutions. Government publishes a financial report annually. So just like the public corporations around the world publish financial reports, and the 3 key financial statements are: 1, income statement, balance sheet, and statement of changes of financial position. And those 3 statements are defined by what's known as the acronym GAAP, which stands for Generally Accepted Accounting Principles here in the US, and most countries adhere to those around the world. So this report is dated January 16th, 2025, because it is the financial report for the calendar year 2024, as you can see. Okay? And this is a 200, I believe, and 50-page document, plus or minus, I think, 3 or 4 pages. But this is an incredibly lengthy and fact-filled document. We're only going to talk about 2 or 3 pages. Okay? This is signed by Janet Yellen, who at the time was the Secretary of Treasury, appointed by former President Biden. And you can see here her signature on this report, which was published in January for last year. And at that point, shortly thereafter, Trump came in and installed a new Department of Treasury Secretary. So now let's look at the health of the United States government, because this is the beginning of the story today, which will be very revealing and supportive of NEVO 3.0's solutions. So here on the left side, what you're looking at is the executive summary of the financial report for the fiscal year 2024 for the United States government. And this executive summary, if you notice on the left, it says results in brief. Now, you'll notice that there are a total of 3, 6, 8. Those dots are actually technically called burger dots. There's 8 burger dots there. And what I find incredibly interesting and frankly disappointing is that the 3 most important and impactful points in this report are highlighted on the left, and they're at the bottom. If you go to the right, I've actually magnified those. So let's switch our focus to the right side of the page. And those 3 highlighted points at the bottom of the left side are now in big print on the right. And let's go through these because this is incredibly important. This is the statement of long-term fiscal projections. Okay, let's read that out loud. Shows that the present value of total non-interest spending over the next 75 years under current policy is projected to exceed the present value of total receipts by $72 trillion. Now let's unpack this statement. What this is saying is excluding, the present value of non-interest spending. Non-interest means we're carving out the interest payments and the cost of the interest on $37 trillion in debt the United States government has. The United States government has direct obligations of treasury notes, bills, and bonds, which equal $37 trillion today. And what they're saying here is we're not even going to include that in this particular point. What they're saying is that we're going to spend more than we take in, $72 trillion on a present value basis through the end of the century. Now, let me point something out. I don't like the fact that they're using the term present value, because what present value does is it's looking at a stream. So we're spending more than we're taking in for the next 75 years. So there's a negative amount over the next 75 years, a little bit next year, a little bit the year after, so on and so forth through the end of the century. By present valuing that back and discounting that back, we're actually making it seem smaller than it really is. So yes, mathematically, the present value is 75 trillion. That is a true mathematical statement. But the unfortunate reality is that the future value of $72 trillion over the next 75 years is easily $400 to $500 trillion. So what am I saying here? I'm saying that the US government is going to spend $400 to $500 trillion more through the end of the century than it takes in. And it's not including the interest expense on the $37 trillion in debt that we have to treasury, bills, notes, and bonds. Let's go to the next point. Debt to GDP was approximately 98%. What does that mean? GDP stands for gross domestic product. That is the total economic output of a nation over the course of a year. So our debt to GDP is about 100%. So let me bring that in practical terms. That means, let's just say my salary is $50,000. I would have $50,000 of credit card debt. And I think we would all agree that if your salary is $50,000 and you have $50,000 in credit card debt, that's a pretty high amount of credit card debt in relation to that salary. Well, that's what's going on here. Our gross domestic product, our economic output right now is very close to the amount of debt that we have. And what this goes on to say is by the year 2099, the debt to GDP ratio is going to be 535%. What does that mean? That means that the salary stays at $50,000, but the credit card debt is now $250,000. And I think we would all agree that if you make $50,000 in salary and you got a quarter million dollars in credit card debt, that is not a healthy financial situation. Well, that's exactly what this point is making here about the United States government, our economic output in relation to our national debt. And that's another not very healthy statement. And then lastly, let's look at this, the statement of social insurance. So here in the US, like in other countries, and we're going to talk about international here in just a moment. Here in the US, we have two programs that are considered off balance sheet, meaning in those two programs we have a retirement system called Social Security. Okay, so if you work here in the US and you pay into the system, you get money back. The problem, and so that's retirement benefits. Second is Medicare. So once you get 65, if you qualify, it'll pay for major medical, big operations, broken leg, you need a little, heart transplant, big things. Government will subsidize those costs. Well, what this is saying is if you add up the retirement benefits and the medical benefits for all the eligible retirees, we're gonna spend 78 trillion more than we take in. And again, what really bothers me is that this is on a quote present value basis. So that 75 trillion is the present value of these cash flows that are anywhere between 1 and 74 years out. And what that mathematical term of present value does, it has the illusionary effect of coming up with only 78 trillion. The reality of it is the future value, the actual hard money expenditures, again, is close to $400 to $500 trillion because you're discounting that 2099 every year by 3.5%. So What I'm pointing out here is that the situation behind the U.S. financial strength, the financial viability of the U.S. government is becoming increasingly perilous. This is not good. We're spending way more than we're taking in. We're projected to be anywhere between 800 and 1,000 trillion more spent than we take in through the end of the century. And so where does that all take us? It takes us here. So now, let's look at briefly other countries, their debt to GDP. So you can see here, Japan, their debt to their gross domestic product is almost twice ours. So they're in worse shape. Greece, same thing. Venezuela, that's where you've seen the photos of someone with a wheelbarrow full of like pesos or whatever the Venezuelan currency is, and he's just trying to buy a carton of eggs. Because their currency has been devalued. Italy, same thing. US, and there's a lot of large countries right behind us. France, Canada, Belgium. You see them all here. So here's the most important point, and it's in the middle. With global debt soaring, fiat currencies weakening, and central banks systematically moving toward digital money, a growing number of governments, institutional investors, and individuals are turning their attention to the possibility of a global currency reset. Ladies and gentlemen, the people that are listening today, Bitcoin's now at 125,000, and there's a reason for it. It's because people are starting to realize, institutional investors have realized this for 20 years, but the average person is now waking up to the fact that the economic health of all the major countries around the world and the bell cow, which is the US, and I'm not trying to be arrogant as a US citizen, it's just a simple reality, is under existential threat. Meaning there comes a time where you can no longer get more credit cards, and the credit card companies say, no, you're so far in debt, we're not issuing you new debt. And at that point, what happens? You go bankrupt. It is that simple. So let me read the middle again. With global debt soaring, fiat currencies. What's fiat currencies? Currencies that are just being printed and they're not backed by gold or some other commodity like oil or gold. And central banks systematically moving towards digital money. Banks are realizing this system's it could crash. Ray Dalio, everyone write this down. Look up Bridgewater and Associates. Ray Dalio was the founder. It's about an $80 to $100 billion multi-strategy hedge fund. Ray Dalio went to Harvard. He's now 70 plus years old. He's retired from the firm. He's like the chairman emeritus. He is an expert. He built Bridgewater from zero. And he's saying that the US dollar could crash in the next 3 years. And that is what's driving people. That fear is what's driving everyone into digital assets. And where's everyone moving? Let's look at the right side of the page. Blockchain, decentralized finance, and Bitcoin, and other cryptocurrencies, as well as projects. These are the global forces that are creating a beginning tsunami effect into the decentralized finance space, which is exactly where NEVO 3.0 is positioned. So let me keep going. So where are the next set of opportunities to protect and grow your centralized wealth? So I'm gonna ask a question to everyone here, okay? And this is the question you need to ask yourself. And this is the question you can ask everyone in your community. Here it is. Write this down. What are you doing to protect your net worth that are dollar denominated or rupee denominated in the case of India, or yen denominated in the case of Japan, or peso denominated in Mexico or Colombia? What are you doing to protect yourself against the devaluation and potential collapse of your currency. I'm going to say it again. What are you doing to protect your dollar, yen, peso, rupee denominated assets against their devaluation and potential collapse? And I guarantee you, 99 people out of 100 that you ask that question to, they're going to say nothing because they're not doing anything. And that's just a simple statistical fact. So let's now turn to the NEVO ecosystem. Okay. And what NEVO 3.0 has done, it's an incredible community, master community of it's a decentralized autonomous organization that's come up with some incredible projects. And again, I'm talking about what are the big forces that are that could drive NEVO's success, that assist you in growing your communities, right? Because this is the story you're telling your communities to grow your communities, right? So NEVO is now concentrating in 3 areas, right? The new projects. We got philanthropy, social media, and AI, artificial intelligence infrastructure. Okay. So let's look at the size. So, let's take a step back. You always ask yourself, and this is a simple thing. If you're going canoeing and you want to go fast, well, the first thing you got to look at is what is the rate of the water moving in the river? If the river's only moving 10 kilometers per hour or 10 miles an hour, well, you can only row maybe another 10 miles an hour. You're only going to go 20 miles an hour. But if the water is moving fast, well, then you have an advantage. And that's exactly the analogy I'm drawing here, is the rivers that we're moving into are rapidly moving and growing. Philanthropy, social media, and AI infrastructures are sectors of significant growth. So when you jump in, if you row right and jump in the right canoe, you can move very, very fast. And in essence, capture an extraordinary opportunity. So let's go on to the next one. Okay. Let's talk about disruption. What is digital disruption? Okay. It refers to a change in expectations and behaviors caused by or expressed through digital capabilities, channels, assets that radically alters the culture, market, industry, or process. In other words, it's an agent of change, right? Disruption is when some new player, company, startup, even an existing company, introduces some capability that can change the dynamic of an entire ecosystem because it's bigger, better, faster, cheaper, or solves a problem that has not been solved, right? So this happens when you bring new digital technology, services, capabilities, and business models and affect the change of the value of the industry's existing services and goods. So now let's look at how big these industries are that NEVO 3.0 projects are now participating in, which is the river example, moving at 30, 40 miles an hour, because now when you start rowing 10 miles an hour, you're adding it to the 40, and now you're moving 50 miles an hour, which is what you want to be doing. Okay. So how big are these markets? How fast are they growing? So let's talk about philanthropy. This is the backdrop for Phil Social. Okay. Here's the economics of philanthropy today. These are statistics taken from the top philanthropic consulting firm. Individual giving is $1.3 trillion per year. 1.3 trillion globally. That is a big industry. Now, well, Robert, why are you calling it an industry? Well, it's a nonprofit industry, but it's an industry. 770 billion of that comes in the form of individuals giving hard money. So every year we have $770 billion going from someone like myself or you to some charity. 559 billion is given in terms of time. So here in the US, we have something called Habitat for Humanity. I'm sure it's the same thing around the world, where you give time and they go build like little houses for homeless people or people that have been, suffered, some catastrophic event, or they're just economically disadvantaged, and they build these small little homes. So I'll be out there on the roof banging nails, maybe a little bit of carpentry, whatever I'm able to do, right? Help pour cement. So people give time and money, but the money piece is $770 billion per year. Okay, where's all this money coming from and going? This is a great chart because this now adds global context because we have people here from all over the world. So the US gives 517 billion hard money. Where's that money go? Religion on the right, religion, foundations, individuals, international affairs, education, health, art, right? Everyone chooses where they want their charitable contributions to go, right? It's not just the US. Ireland at 1.2 billion, UK 18 billion, Singapore 1.2 billion, India at 15 billion. Okay? This is where the $770 billion is coming from. It's all over the world, being given to a variety of causes. So how do we get in the middle of this? So on the left, you got the countries and the people. On the right, you have the destination of the capital. How do we position ourselves in the middle of this chart? Well, guess what? That's Phil Social. And that's the opportunity. Jerry Lopez, the founder of Phil Social, who I've had the good fortune of meeting with and spending a day with in Dubai. And that's his project, the Phil Social project, which is ideally positioned to put itself in the middle and capture, through disruption, some of this business. Now, let's culminate talking about philanthropy. Here are the major trends reshaping philanthropy. Digital transformation and online giving. Okay? Technology is reshaping philanthropy, making giving more digital, instant, and accessible. Over 50% of donors prefer online contributions versus debit or credit cards. So I'm going to be 64 here in November. So I've been around a while, right? 63, almost 64 years. I remember when philanthropy was getting, like, here in the US, again, it's the same, it's similar, or maybe a little bit different around the world, but it used to be in the mail, right? Vietnam veterans, disabled veterans, even my university, where I'm an alumnus, they send you a letter and a little tearaway at the bottom. Well, that's all going the way of the dinosaur, okay? Hard mail, snail mail is not the way it's working. 50% of donors want this online. And it's not on a desktop. It's all where? On a smartphone, okay? Next, online giving, currently 10 to 20% of donation revenue. Now we're talking about dollars, not people, is projected to reach 30 to 50% by 2034. So what is this report saying? This is saying that right now, 10 to 20% of people are doing this of the dollars is online, and it's going to go to 30 to 50%. Now the question becomes, who's going to catch that delta? Who's going to catch that 10 to 20 that moves 30 to 50? That increase is going to be captured how? Online, on a smartphone, but with whose application? And my thesis here today is that Phil Social is ideally positioned to capture a significant part of that growth, right? Digital fundraising isn't an option. It's now a necessity, okay? Incredible point. Now, let's now move on to the next thing in Phil Social, right? We were talking about social media. So on the left, you see all the names that you're familiar with, right? We see YouTube, LinkedIn, Twitter, Instagram, Facebook, YouTube, right? These are all the existing social media platforms. But what Phil Social is going to do is it's going to combine social media and philanthropy, and it's the next evolution in philanthropy. Capturing that migration online that now everybody wants, okay? So how big is social media? Let's talk about that, okay? So here you see, how are we doing so far? Give me a little feedback in the Q&A if you want, or there's a chat window here, two hosts and panelists, okay? So let me continue here. How big is social media? So these are the 10, what you're seeing here are the 10 largest social media companies in the world, right? You got Meta platform that has a value of almost $2 trillion. Tencent Holdings, 700 trillion, right? Reddit, 42 trillion. And these are all over the world, right? Omnicron at 15. We're talking close to $3 trillion in market capitalization. What is market capitalization? All we're doing is taking the stock price times the number of shares that are out there for that particular stock, right? So if there's 1 million shares at $10, the company's worth $10 million. In this case, when you multiply the stock price for Meta against the number of shares that are out there, it equals almost $2 trillion. This is a $3 trillion enterprise value industry amongst just the top 10 holdings. Significant. Now, where do the revenues come from? Why are they valued so much? Because here are the revenues. Facebook takes in 80 billion, Instagram 49 billion, YouTube 31 billion, TikTok 16 billion, WhatsApp 1.2 billion. So there's $222 billion in revenue from those social media companies. That's a lot of revenue. Now, how much of that revenue is being shared? Not very much. And again, that's where Phil Social comes in, because they're going to do a revenue share when you participate, when you engage, when you run conference calls, and you're going to earn tokens, and then you can monetize those tokens, but you have to give away half the tokens to get the other half. So it's creating an ecosystem that combines social media and philanthropy, and now incentivizes you economically to both participate and give. And it really captures the following adage: doing well by doing good. So Phil Social, ideally, this is the space they're going into with a disruptive and platform that's going to change that ecosystem and grab significant market share. You have the opportunity to participate that individually and bring in your communities. Lastly, let's talk about artificial intelligence. Okay? AI, as it's referred to, is changing the world. How big is this opportunity? Okay, now this goes into Phil AI mining, right? So this is now we're talking about what's the context, what's the environment that Phil AI could disrupt. Because if you're jumping into a river that's moving 5 miles an hour, we all know we can only paddle 10 miles an hour. You're only going to go 15 miles an hour. Okay? You want to jump into a river that's moving at 60 miles an hour, you add 10 to it, and now you're going 70 miles an hour, and you're making progress. So the analogy is you want to grow in the markets that are large and growing rapidly. So how big is this? I'm now showing you industry data. This last year, AI cloud market was an $87 billion business. This year, it's $121 billion. And it's expected to reach, in 2030, $647 billion. This is a big industry that's growing rapidly. Again, and the Phil mining is going to jump into this industry and participate through a disruptive business model. And in my opinion, there's a lot of components to artificial intelligence. You got hardware, you got software. It's a big ecosystem. But I think the limiting reagent, as they say in chemistry, the key ingredient, the critical ingredient that there's a shortfall of to enable this growth is going to be infrastructure. It's going to be hardware. And that's exactly where Phil PAI, Phil Artificial Intelligence Mining, is going to be participating. This is a very large industry that's booming. If you bring a disruptive technology, you can capture some of the delta and capture some of this business growth here. AI cybersecurity is big business, which we can support with Phil Mining. Same thing. 25 billion last year, going to 93 billion. This is growing at a 25% rate of return, 24.4% over the next 5 years. Another rapidly growing industry segment that Phil Mining is going to be participating in. So, artificial intelligence is changing the world. And we think Phil AI Mining will be a leading provider of critical and scalable hardware infrastructure to AI cloud services providers. Again, what am I doing here? I am providing the context of, it's back to my example, right? Okay, I can only row 10 miles an hour in my canoe. What river do I want to be in if I want to move fast? I got to find rivers that are moving 50, 60 miles an hour. And I have to have the skill to be able to navigate and steer that canoe. And so this is where the partners come in, and the leaders who've done an incredible job of creating these programs and on an ongoing basis will be managing them. So what are the key elements to success here? I will tell you this categorically: having 40 plus years of experience in capital markets, in business, it's recognizing the right opportunity for industry disruption. If all you do is come with a Me Too product, you're not going to win the game. Okay. In fact, you're wasting your time, because what you're doing is, if you're introducing something It's exactly like everybody else has. Well, I can tell you this, you're already behind. And here's why. Because those existing players, you're introducing version 3.0 to manage their 3.0. They have a product development roadmap. They're 6 months away from introducing 4.0, 5.0, 6.0. So they're ahead of you. Even if you, for a moment, you do a me too, you're already behind because they'll be rolling out new products. That's product development cycle. So you got to come up with something that disrupts. You got to be far ahead. And I see that between Phil Social. Next, developing the right strategy that enables quick adoption, accelerating adoption, quick entry, accelerating adoption, and market dominance. You need a strategy that pierces the flow of that industry. It has to have a commercial and technical value proposition that is superior to what's out there. So when you go to prospective customers, your commercial and technical value proposition beats the existing incumbents. Oh, wow, you have something new. This sounds bigger, better, faster, cheaper, and more powerful than what I have available to me now by the existing players. Let me start switching over to you. I see that here. Next, and having the right leadership with unyielding integrity and superior business intelligence. Anyone who's listened to me, I always say the same thing on every single call. I have said this on Global Legends, the NEVO 3.0 calls, since my involvement began 18 months ago, doing these calls. And here it is. You have to associate with people and do business with people that have integrity and intelligence. Because if they have integrity but no intelligence, well, then they can't help you. Right? Oh, I'd love to help you, but they can't. But if they have no integrity and intelligence, well, then they'll steal from you. And I've had the opportunity to spend a significant amount of time with Jeffrey Gann from, one of the Dow leaders, I think one of 53 or 54, and as well as Jerry Lopez, as well as the gentleman who runs Phil AI Mining. And these people possess impeccable integrity and the right leadership. And the intelligence piece also comes in here. Sometimes things don't go according to plan. And it's rare that it happens, but sometimes it happens. If you're dealing with really smart people, generally speaking, they can avoid what I call pivoting. But if you have to pivot, then you better pivot quickly and you better pivot correctly, meaning you have the business intelligence to pivot and move the business in the right direction because the world is dynamic. So venture capitalists look for that. They're not only looking for superior team, ethics, smarts, business model, superior commercial and technical value proposition, strategy, capital. They're looking for everything, but they're also looking for a group of people who, in the event that we have to pivot, can and redirect to make sure that the enterprise wins for the benefit of its investors. So that'll conclude my remarks. Let me just stop the share here. And let me just go back to where I am here now. Hopefully everyone can see me. I'm trying to figure out here. I think I'm the leader of this thing. How I open it up to Q&A. Let me see here. Anthony, can you you guys all still there? Give me some feedback. I'm not sure I know how to open up the mic here. If someone would kindly in the Q&A make a couple comments, how you viewed the presentation, I would be grateful. Okay. Well, we still have 18 participants on. So I think it was well received, the commentary. Let me open up the chat. Let's see what we got here. I'm going to write my name in here. I'm going to say hello, actually. Let me hear NEVO 3.0 posts. Okay. Oh, we got people joining here in the video element.
Yes, sir.
Okay, I'll take any questions. Anyone, feel free to ask a question.
No question. Well explained, sir. Well explained. Very
Okay.
happy. I don't know how to open the camera, but
Yeah, I think as the host, I apologize.
mhm.
I don't know either, which I will figure out next time.
It's okay, sir. It's okay. I'm Amit AP from Amit Pandey from India.
Okay.
Yuri has sent me this beautiful invitation, and I really, really, I'm very happy to listen to the thing. It's a great project. It's a great project.
It really is. And I
Yeah,
think
yeah,
it's a great project in light of what's happening in the world today.
yeah, yeah. That's true. That's true. Mhm.
And it goes back to my simple analogy. If you want to travel fast and you got a canoe, well, you better find a river that's moving 50 miles an hour because you can
Very
only
true.
add 10.
Very
And
true. Very true.
and the Nevo 3.0 is playing in AI, philanthropy, and social media.
Mhm.
And those are exactly the sectors you want to be in. So
Wonderful. Wonderful.
uh,
So we
I
would like to
listen,
connect once again with Yuri 101. So how we can explore the Indian market, and I have my network in next 30, 40 countries as well. So how we can join hands together and do the great business together.
yeah. So for the leaders on the call, since everyone's still here, I've been given the opportunity to make these presentations to leaders, but
Mm-hmm.
we need good crowds like today.
Mm-hmm.
So I can be reached on. I think the best way is to be reach me on WhatsApp. So everybody jot down my WhatsApp number. Let me
Mm-hmm.
see if maybe I can publish it here in the chat. Let me see if I have to host
Chat
panelists.
is disabled, sir.
Huh?
Chat is not disabled. It's disabled.
Oh, it's disabled. All right. So
Yeah.
let me verbalize it and then we'll close out the call. So it's +1
Mm-hmm.
609
Mm-hmm.
304
Mm-hmm.
4146.
Okay. I repeat, +1 609 30 304 4146, right?
Correct.
Okay. Robert.
Yep. So for the leaders on the call, if you want, Dr. Gann has authorized me to do these calls. Get your communities together, really push it hard, and would love to help all of you. So I want to thank everyone who joined the call.
Mhm.
I'm here at the invitation of Dr. Gann and the other leaders of the DAO, decentralized organization known as 3.0, NEVO 3.0. And if I can be of help to you in a well-attended call by group leaders, be happy to support your growth in your community.
Great, sir. Great.
Thank you, everyone. Have a great day, great afternoon, great evening, and let's do great things together.
Yeah.
Take
Thank you.
care.
Bye bye.
Mhm.
Take care now.
Bye bye. Good night.